Hi, and welcome again to another edition of Market Analysis for today, July 5th of 2024. I'm Giovanni Benacore, analyst, trader, and educator with Vantage Markets, and this is a recording previous to the open of the U.S. session. All right, well, after a couple of days of being in holidays for myself, yesterday being 4th of July, and on Wednesday took day off. So we're back at it. We're back at talking about the markets. Even though politicians like to take credit for rising stocks or in some cases predict a crash if they lose, markets don't have strong ideological preferences. The only important thing is how governments might affect companies both lines. Shares can thrive or suffer under policies that lean left or right on the political spectrum. It's also received wisdom on Wall Street that the market likes gridlock in Washington, D.C., power divided with one party in the White House and another in control of Congress. But what markets like even more than that is certainty. In other words, a high level of predictability about what the government is going to do for the next few years. Gridlock usually means very little will change, so traders tend to like it. Since President Joe Biden's shaky debate performance last week and former President Donald Trump's favorable Supreme Court ruling on partial immunity, stocks have been going up, and so have bond yields. The stock move may have been in part due to an increased sense of certainty about a Trump win. With bond yields, the pessimistic move reflects the idea that Trump's policies on trade tariffs, reduced immigration, and tax cuts will be inflationary. Hence the shift to higher interest rates. Another example, the UK is issuing sweeping change after a decisive center-left victory, and stocks are rising. It's a different story in France, which is deeply divided. Marine Le Pen's hard-right party is looking like it could be the biggest group in parliament, but perhaps without a majority. The uncertainty is bad, and stocks have slumped since May. Now, if Biden drops out and Democrats find a new candidate, the Trump trade may reverse. If they do, the key factor for markets isn't the policies per se, it's the impending uncertainty. For today, all eyes are focused on the U.S. non-farm payroll data, set to be released in a couple of hours from now. It's forecasted that the June non-farm payrolls will come in at 191,000 compared to the previous value of 272,000. Here's a kicker. If we do see again a much higher number than 191,000, how will the markets react? Or if we see a much lower number of 191,000, how will the markets react? That's a kind of a homework for you to follow up on. All right, so let's take a look at what we can expect as market fluctuations for today. Taking a look at obviously this chart of the NASDAQ daily chart. Okay, let me just bring this down a little bit. We know we are in overbought territory in the RSI. Let's use the Fibonacci retracement tool, and let's just do from this low of April all the way to where we are right now. Okay, there's one around here. Okay, so looking at this tool, all of this movement, where can we say that if there's going to be a retracement after we're making new highs, because this is the high that was made on June 20th, now we are in completely new territory. Okay, so are the markets likely to continue moving higher? Well, using this tool, there is one particular value that obviously we follow the golden ratio, which is a 0.168. So the market will have to retrace all of this, perhaps not, right? But looking at this particular way of analyzing this whole movement, we can actually say that the market isn't in a condition to drop all of this movement just in one day. Okay, it just isn't. So what we can do is, okay, so we can say that we have pretty good support of the market given this complete run. So we can use come to analyze the point. Okay, so we have good support. Obviously we are in new territory. Will the market have enough leg room to continue moving higher? Well, let's just use another Fibonacci extension and see. It's called the Fibonacci extension trend. So we can use it several ways. Let's just use it from this double bottom to where we are, okay, to where the high is, and let's just use it to where the market is moving today. So let me just expand this tool. So you're gonna use this double bottom as a reference of the lowest point where you started this move, right? And extend it to the high. Okay, we can say to the high of the previous of the highest before this one for today, right? Because today is just beginning. So yeah, that was yesterday. This is Wednesday. So to that high that was created on Wednesday. So and to the low that we have done so far today. So we can use these levels, okay, as probable levels of resistance. I have a 20,500 for me is a better number than the one that is used. That's just because I like round psychological numbers. So that's where I'm going to place my particular level of resistance. And the support, we could come in and say, okay, support 20,200, which is basically that low, the low wick of Wednesday fluctuation. So we can come and say, okay, if we happen to fluctuate above that resistance, which is not right, really close by it, then can we say that we can use the Fibonacci golden ratio to say that that's where the market could probably have room to spend? Well, we are in overbought territory, so perhaps not today, okay? But at least do come to the 0.38% at some point this week, well, between today and tomorrow, obviously. So let's see what will happen. That's just one way for us to analyze where could probably the market extend to, but just by using the Fibonacci numbers. Okay, so that's that for. Oh shoot, I deleted the. I'm gonna just clone this one, change the color to it red, and I'm gonna bring it over here. Okay, so there they are. That's for the Nasdaq. Now let's take a look at the S&P. So again, also the S&P, they're all making new highs. So 5,600 was barely almost touched, almost kissed today. So another way, without using the Fibonacci extension tool, is I'm using the Bollinger Bands here. So I could use the upper band as a level of probable resistance. From here on, we can fall back on previous moves because it's all new territory. Okay, we are in all new territory. So we're making highs, making lows. Those highs making resistance, those lows being support. So for now, that's where I'm going to be placing my level of resistance support for the S&P. The Dow. The Dow also is just on my, not also, is basically trending off that level of support or resistance. So 39,800 is going to be the level of resistance for the Dow, and 39,400 is going to be the support. So the Dow has a different behavior than its peers. So it's looking to trend lower. Then we have crude oil. So crude oil, I'm having that $85 marker for crude oil. Today we have opened with a small gap down. Let's see what will happen. $82 is going to stay as the support for crude oil. Nat Gas. So Nat Gas, let's just bring down that level of resistance to $2.40. Leave that to 20 still. Okay. Let's see if Nat Gas will decide to recover, start recovering today. It has been trading lower. Gold is looking mighty shiny. So 2380 resistance. And let's just use 2340 as the support, RSI farther away. Nice move to the upside on gold. Been bullish on gold. Silver. Let's take a look at silver. So silver, we close to it, nicely moving higher. So 3130 is gonna be my target, and the medium is gonna be my support. So buying silver. Copper. Looking at copper. Oh, nice move to the upside on copper. Wow, parabolic movement. Picking up some steam here. Oh, so with $5 being the radar for next week. 450 the support. 480 the target. So buying copper. Bitcoin has just slumped. Just boom. Just took a dive. 52,000 is gonna be that support for it, and 60,000 psychological resistance level for it. So let's see if it'll finally recover, or will continue to just take a deeper dive. Then we have in here the euro, US dollar. Oh, nice move to the upside for the euro. Nice. 107.80 is going to be the support. So buying the currencies today. Nice. The pound. Let's take a look at the pound. The pound is also moving higher. So let's just use 128.200. Nicely done. And let's use 127.400 for support. The dollar just must be dropping like a stone. And the dollar index seems to be taking a beating. Also, another thing to keep in mind, look at what happens with the dollar index when the non-farm payroll number come out. Okay, keep an eye on that also. All right, guys, well, this is it. Have a great trading day. I want to also invite you to a webinar coming up next Tuesday. Okay, is on how those active traders stay active. It's about taking a look at different aspects of trading, looking at some strategies. So hopefully you'll be able to join me. It's next Tuesday at 7 p.m. UK time. All right. Thank you for watching.